Who's here bought more than 5 houses, I guess? So that's a significant amount. You know, I'd say that puts people in like a different category of investor, because I think you're that you see real estate as a true asset class, you know? You're always building the plane as you're flying it. You know, so like depending on the strategy you have coming in, if you have a short term, like you need to know your outs, as Steve talking about, but a lot of times you don't know until you're in the deal what your best outcome is. We can analyze it 10 ways from Sunday, laws change, things like that are going to shift. In real estate, you know, that's why it's always been very interesting to me when people come in, it's like, I'm a buy and holder, or I'm a fix and flipper. It's like, man, like you're an investor means a lot of different things. Some you hold, some you dump, some you know what I mean? Some you finance certainly different ways. Some you go long-term capital, some you go short-term capital, some you go in transactional capital, some you're whatever. Where I figured out was what allowed me to close us to close a lot more types of deals is just always factoring every single out. That's it. That's why we're able to close on more types of deals. Like not a lot of money, like at all. Like I think my first year in business I made $5,000. And I was in financial planning. And everybody I sat down with had any kind of retirement at all. It was like a little pension. You know, I dealt with engineers, whatever. You know, some of them, you know, a couple $100,000 for retirement. They're in their 60s. You know, like what are you gonna do? Dude, looking at Social Security income, I was like, oh my gosh, like all my own real estate. So when I bought my own house with a partner similar to him, same thing, totally freaked out, whole thing. Like everyone's probably has a similar story. I was like, oh man, like. You know, I really, in retrospect, what I've been able to do is speed up that process. I lived in it 2 years, right? Did capital gains thing. Look at me, I'm so smart. You know, it was a little condo, barely appreciated. Didn't really get. I think I got my money back out at most. You know, and I was like, but I did was expedite the process. So how do I expedite the process? How do I do that in 2 years in a day? You know what I mean? And that's what's like, okay, that's just sales marketing, right? Acquisitions, valuations, systems, like tightening up those things. That like would start to make more sense to me.
And that you think can only be learned by doing, as opposed to what you can learn in books and workshops and seminars.
I mean, all of them.
All of them. Okay. So, is there a value to the books and the workshops?
No. My dad got a postcard. We went to this thing. It was like in Van Nuys. He's like, well, it's $3,000 to be here. And I went there with my dad, and I learned something. I sat there, and I was like, all right, cool. I didn't know what was going on. And then they're like, okay, now it's $40,000 if you want to go. So my dad's like, I wasted $3,000. But he didn't. You know, ultimately he didn't. I mean, look what I was able to do. You know, my dad was a blue collar guy, he's an HVAC guy, you know. He didn't. I don't think it's a waste of money to get education, or there's very smart people out there. I think if it's their business, it's actually better than it not being their business, because that means they can actually teach you something. Like I played around with education for a little bit, and it's like, oh, should I? You know, I don't care to make money. I'd rather just do deals with people. But I think with the right intent, the right people, I absolutely think it's effective. It's just you have to find the people that are sort of doing what, you know, and figure out what the cost of entry is, and if it makes sense. So usually they're teaching you how to fill out offers on MLS and tie up contracts. I think it's kind of like more the shtick is like how to wholesale from the MLS, which is, I think it's a very hard thing to do if you don't understand contract language and stuff. That stuff pretty quick education wise. You can get a real estate license and then sit through a couple SDCIA seminars and webinars, and you'll learn the same. You know, maybe not as hands-on, because you're not paying us money necessarily. I'm just being real, but like hands-on enough where you can learn something. You know, the whole point of that is perspective. You gain someone else's perspective, right? So if you gain someone else's perspective on real estate, like if you sit with me for an hour, I'll give you perspectives you never thought about. You sit with Tawana for an hour, he's gonna give you a perspective you never thought about. That's why you sit with people and connect with them, and then you gain your own insights. You internalize, you gain your own insights, and make your own decisions. If you have guidance through a good agent and a good broker, or someone who's wholesaling or whatever, great. But you're just perspective seeking. Ultimately, that's why you're all here, right? And what, you know, for me, so it's like, yes, you learn a little bit, but ultimately, you only gain your own perspectives through action. So if you delete everything away and just take action, as Tawana spoke about it, it's like you're going to gain the perspectives necessary to have your own insights. So you're going to raise your own type of money. If you're raising money, you're going to be doing your own types of deals. You're going to finance it different ways. You're going to find different strategies and be forced to be resourceful. I will say this, there's this whole no money down thing, by the way. I've done my best work with $0. Okay? Zero. But this. So that's the part that's very important. But action to get there with people that were doing this. So because I knew it was secure capital, I wasn't scared of it, things like that. That's the key though. It's not the money, right? It is true that at the same time, yes, you need resources. Yes, you do need money. I will say that for sure. But the point of entry is not as high as you think it is. It's not a money thing. There's a lot of people with a lot of money that don't own anything. You know, they're good in business or whatever. Other people who have no money, but have found themselves with a high net worth because they're partnered in certain scenarios. So I think you got to like figure out how that plays into your skill sets. I'm not. I said, not that I'm not warranted. I guess I'll just kind of tell you like this. I don't think changing the calendar and doing the whole thing every year makes any sense. It's never made sense to me. Every time I've written down a lot of goals, and I'm like, oh my goodness, I've never done one of them. Maybe one. So that changes. I just think like, when you have kids and you're in the thing, like you're like, oh, it's just December, now it's January, like I don't know, honestly, I'm starting to remember now it's 2026, right? But 2024 seems like it was just yesterday. It's like I really look at the aggregate of like, what's the goal? 5 years, I can understand better. So like 5 years, 10 years, where do I see payoffs happening? Where do I see net worth increasing to? Where do I see ultimately the business, the people in the business, where they're going to be? So I spend most of my time thinking about how do I increase other people's net worth as opposed to like, how many deals am I do this year? How many sales am I going to do? It's like those things will come. That's how I look at it, as opposed to like, what's my goal? Some of you may have, I've had nothing before. So like nothing, nothing. I didn't buy, didn't have anything, didn't have any money, whatever. Like that's, I think that's, I'm jealous sometimes. I seriously, because I was so after money that once I got it and then I bought stuff, I was like, dude, that seriously, like, and not like, I'm not saying like, oh my God, a zillion, but like enough money where I could buy anything I wanted, anytime, right? I was like, it does nothing. I'm telling you, it's the craziest thing of all time. But I'm one of those people that has to experience it to believe it. So like, everything I tend to do tends to be pretty experimental for me. Because I'm like, I don't believe what anybody says, just so you know, which is like a blessing and a curse. So like, even like when it comes to goal setting, I tend to be more of like a oppositional, just by nature. So it's a weird thing. So like I used to have goals so that really drove me really hard. It really was the driver. The target was freedom, right? Like freedom, or like financial freedom. Without a doubt, making a certain amount of cash, flipping some houses, learning how to do that will give you some freedom. But ultimately, if you don't love it, so what I think about it all the time is, well, I tend to really like challenges. I like hard things. I like to chase things. So my goals tend to be things that are like oriented around that, around business. And the nice thing, and here's the thing that I don't know if I learned this or figured it out or gained insight, however it was, what I realized was whatever gives me energy is what I should be pursuing. So the more energy I get from certain things, more energy I get doing it. It's like a snowball effect in the direction I'm going. I tend to love real estate deals. So because of that, it's like I'm in a great place for me because I enjoy doing it and I'm doing it every day. So it's like now I'm grateful I've gotten to this place, but the money became the byproduct of the day-to-day that I loved it, super into it because the pursuit is so exciting. Not like got that one thing or that whatever. Because like I think everyone knows when you hit a goal, it does pass, you know? This conversation went a different direction, I think.
Yeah, philosophical, though. Have you lost investors' capital and have you lost your own money in a deal?
Never once lost a penny of investor capital. Investors has always been made whole. Usually goes all raised on notes. If I do raise on equity, I still give them a preferred return. So they always get paid first. Anytime it's a more aggressive deal, I do not bring investors in because I'd rather lose my own money than anybody else's. Advice I give anybody who's stuck in anything is like, just do the whole finish it finish it. We buy fixer stuff, right? We get sent deals. Dude, daily that are like investor halfway through, running out of money, this and that. Take the bath. Take it now or do everything. That particular one, I was under resource construction wise. I was feeling fancy with the market in 21, 22, did the, whatever. Cut a check to sell it. They got the hell out of it. Lost $130,000 on that deal. Other deals though, for the, drastically up over time, but I've had some stinkers. So I either cut them or I kill them. You kill them in a good way. You know what I mean? Over rehab.
So you're saying HGTV isn't really accurate, the way that just flows right through in 30 minutes?
How I look at that is like, well, you know what I'm gonna do? I'm gonna do the best freaking job so this thing sells day one on market. I'm gonna make it the sickest freaking property, like a tropical place. It's very unique. So I'm over investing into it to get out of it as opposed to under investing because I'm pissed and I feel under resourced or whatever. So I'm just gonna put more money in than I wanted to and make it a must buy. Because at this price point around 1.7, like you have to do a good job. So we're gonna put more in than we originally wanted to, probably another 100,000. And anything to leave anybody with is don't think in absolutes. Market's hard. What do you mean it's hard? Market's easy. What do you mean it's easy? I can't find a deal. Where? I can get every deal. Whatever. Never think in absolutes. Don't be so black and white. Because what that tends to happen is like you'll believe your own BS when you're very absolute. If you're going after small commercial, it's much different than single family. Define where you want to get it. So that these are like very basic, but they seem to be whatever. And then figure out who has it. So that's either consumers or brokers and agents, period. No one else has the asset you're looking for. Wholesale may have the contract, but ultimately it's consumers or it's agents. How I look at it. So consumer bucket, like I said, if you have a marketing skill set or if you can find properties, then you got to figure out how you want to market to consumers. If you want to have a marketing budget and if you want to say, I'm taking whatever money from here and I'm putting into consumer marketing. When you first start, it's really time. There's not an investment, so you're taking your time, but like, how do you quantify your time? So you could say, okay, I want to take every notice of default on data, every person who's in pre-foreclosure, so I've done pre-foreclosure, done a ton of direct seller marketing there, had a lot of success. A very slow sales process, about an 8-month sales process, but I've had a lot of success in notice of defaults. Also very competitive. Your biggest competitors are attorneys and other agents. Great funnel though. Death of a joint tenant, a good data set as far as consumers go. So now these all and then look at probate stuff. Okay, probate, who has probate? Well, probate attorneys have probate, or estate planners have probate. So if you're good with attorneys, you can build relationships with some attorneys. It may be other agents that work with attorneys in the probate side. Probates check a lot of boxes because a lot of times they are distressed, they are fixer-uppers, they are value-add properties, and they need a cash sale. So a really good target. And then rental homeowners are interesting because you have a lot of investors who just won't give it up and they don't want it, but you have the tired landlord thing, which is they've owned it for like 20 years, they have tenants in there. These are all data sets. If you pulled this data set using Property Radar, any of these tools, you probably have $25,000 pieces of real estate to market to or prospect, right? So you can use your time, you can knock on doors, you can call them. I've done both. Called them, texted them, different tech stacks at work. If you want to go consumer. And then agent funnel is different because you need to be prospecting with agents who have off-market fixers who are looking to sell them, who are dealing with investors and are more investor-friendly. And so you have to talk to a lot of agents. So those are the most effective funnels that I know exist, that I've used and been effective. Thing in real estate that I think I've ever seen, for me, is valuations. Like everyone talks about marketing, right? We're talking about marketing today. No one, who cares? To be totally real with you, marketing actually isn't the problem. It's understanding what's a deal if it hits you in the face or not. And not retail value. Like if you buy 70% of value today, you just gain 30% in gross equity. You do that 3 times a year, it's 90%. You just gain 100%. You just bought a house for free, right? Let's just use these funny examples. I think just learning how to acquire properties and negotiate prices based off an acquisition price that makes sense is by far the greatest skill set you can learn. By far.
And that goes back to what we were talking about earlier, is how do you put the deals together? You listen, you're creative, you figure out how to solve the seller's problems.
Yeah, but if you go back to step A, if I don't know what 1 + 1 is, if I think 1 + 1 is 11 and not 2, like that's real estate most of the time. Like you do not know. And you got to understand, like, too, it's like what's going to affect the value of a deal, what's going to affect a refinance, what kind of debt's going to affect like, you have to learn that stuff. And so I think that, like, but if you buy it right, you're always safe. You ever know what I'm talking about? You bought a property right, even if you didn't know what you were doing, man, not right time, right price. You know, timing can vary, right? And we all end up in the world different times, but just right price relation to current values, that's what it is, period. Acquisition price.
You had a question over here?
Yeah, to follow up on that, what metric do you like to use to identify what the value is? You know, like a cap rate or a cash on cash, you know, and there's probably several, or, you know, and each individual may have their own metric that they use.
So before you answer, I'll say, we actually had Dan up here, last year, doing a whole,
It was 2 years ago
2
on
years ago.
Valentine's Day,
Yeah,
by the
a
way.
whole
My
demonstration
wife loved that.
on
Yeah.
how to value the project, so he's the guy to ask.
Yeah. The metrics I use for valuations are I built them proprietary over looking at a lot of deals. So that's just kind of like build it, but ultimately it's not rocket science. I just have different value killers against the deals, but ultimately I don't make it sound more difficult than it actually is. It's just what's worked for me. So what was it? The exact question is what criteria was that? Cash on cash, this and that. Depends if it's a hold or depends if it's a flip. I value everything as a cash deal because like everyone talks about, you can refinance, BRRRR method, right? You've heard BRRRR method, BRRRR, buy, refinance, whatever.
Buy,
refinance,
rent, refinance.
and you get all your money back out, right? All of your money that you're in back out. I have $0 in now, this and that. It's like, well, problem with BRRRR refinance is that maxes out 70% of ARV. So if I have $1 million value, ARV, remodel value, if I don't know what ARV is, that's the first thing you got to learn. $1 million gonna be worth remodel once I make it the best property on the street, okay? So the most I can take out is $700,000 in a non-owner occupied. Oh shit, if I bought that property at 840, put in 60 grand, I have 200,000 of dead money sitting in there. As an investor, I don't like that. That's not what I like. My money's gotta be move in, period. So I want that deal. So you're better off doing less deals, one at 65, buying that one. If you can get that screamer at 650, go get it. Of course, put in 60,000. Now you can have, but I think about how much dead money is sitting in deals more than necessary. So the other thing. So I think so if you value rate on cash deal for at least a cash deal, you'll be safe as far as valuations. You got to be okay. Well, how much money you want sitting here versus there. But so your internal metrics are going to be. This is assuming you're getting debt. Even if you're not getting debt, you know, I just think real estate debt tends to be. It can be your favor if you use it right. So that's the thing. A lot of times people are like, it's below market value. You're gaining equity. Dude, BS. Even occupied, you can't touch 20% of your equity. What are you talking about? 80% is what you're looking at per property. So if I have $1 million deal, the most I want to be in that thing is 800,000. The absolute most after rehab. Okay, so this is where the rubber meets the road for a lot of people where they're like, I bought a good deal. It was below value. I gained equity. I'm like, what equity? Until you sell it, then you have to pay a bunch of commissions to sell real estate, as we understand all that stuff. Trust me, I paid millions in commissions to sell properties. I'm not against it at all. I work with agents all the time. But it's expensive to sell real estate, right? It's expensive to buy. So think about finding the better deals price to current value ratio. You're not going to find that retail deal worth $1 million at 800, and it's not going to get it. That's why construction is so important. So if you can get those at 600, 625. Now, some of you guys have corporate jobs and other levels of net worth besides the property you own. Yeah, you can get a non-QM stated income deal where you can get 80% of your equity non-owner occupied. You can kind of squeeze that around. So you gain 10% just by having good credit, having some other income. So think about it more ways than that. So that's how I look at it. So if you look at a variety of different deals, you're thinking about, okay, like what price to current value ratio, what can I actually take out and not have dead money sitting in? So my cash on cash is much different because I want it. I don't make a red cent in my life beyond investing. That is how I earn every freaking penny. Every penny. We're always, our sourcing is much higher, volume is much higher, our price to values are much higher. or much lower. So we're more conservative on pricing.
Back through and give everybody a hand. So let's first, we got Dan, Daniel,